Hey traders, welcome to Charts and Coffee. Hope everyone is doing great. All right, happy Tuesday, happy holiday affected week Tuesday. We do have a far more sedate economic calendar than we had last week. But certainly this is the beginning of the fall trading season. So as we move into today's trading, Tuesday's trading, we're going to start to see that ramp up of volume, just the opposite of what we saw the last 2 weeks of August, which is that ramp down in volume. And remember, gang, if the last 2 weeks of August felt sort of tough and or inactive, remember that's probably a good sign that you're not over trading, that you're not pressing your trades unnecessarily. When I look at my TradesViz, and it doesn't matter the software you're using, I just happen to be using TradesViz. But when I look at my trading journal, right, whatever you've chosen, TradesViz, TraderSync, TradeMetria, there's so many of them, Wingman Tracker, which I still actually like a lot as well. But when you look back, really in a natural P&L flow in August, and I've looked back at some of my past. In fact, you can go back and upload statements from any year from nearly any broker. And I looked at my last few years of rhythm for August, and they were either just flat or the first 2 weeks were good, and then they just sort of flattened out. And that's the latter. That's what I had this year. The first 2 weeks were fairly active. The bulk of my trades came the first couple of weeks of August, and then things started to flatline, not only in the number of opportunities we had, but also in the general P&L. That's where most of my losses occurred in the second half of the year, and things sort of flatlined. And I think back and wonder, all right, well, was it worth trading the last 2 weeks? Yes, because I had the day trading gear to shift into. I still had a pipeline of opportunity, but just not the same kind of P&L growth that I saw the first 2 weeks of the year. But we'll get into a lot more of that on Wednesday. By the way, if you haven't yet seen that, this is the class, but I really definitely want those of you that haven't had a chance to see what it was I was doing, how I'm doing it, the tools that I'm using. If you go to simplertrading.com/gain, this Wednesday at 8 p.m. Eastern, we have webinar number 2. Now remember, webinar number 1, we really workshopped it. We talked about the sequence. We talked about the tools that I'm using, what time frame, time horizon, what the expiration and the typical options that I would buy. So we got into a lot of that on Wednesday. So if you have time to check it out, do check it out. And then this week, we're going to get into a little bit more Q&A. I'm going to dive into, at this point, because August is closed and done, I can dive into my TradesViz for August and show you the good, bad, mostly good, but also the bad and the ugly. So we're going to get into that on Wednesday, 8 p.m. So simplertrading.com/gain. All right, so let's jump into our morning here as well as tackling the questions. I've got the folks from our Essentials room. Great to see you all. Happy Tuesday. And of course, our YouTube, my YouTube, at Raghee Horner, and good folks over on Twitter. All right, let's get to it. First question of the morning. Hey there, Howard. All right, first question of the morning is, can we check out the euro? Yes, gladly. And that is a 6E. Sure. Great question, because if we want to know what is happening with the US dollar, the euro is the best way to do it. And the reason I say that is because the euro is 58% of the US dollar basket. Really important to remember. And by being 58%, it's an inverse or negative correlation. So euro zigs, dollar zags. Yes, they're going to do the opposite. The euro has yet to catch a bid. Euro's having a hard time with the 200. So as much as I want to be bullish to euro, it's going to have to be in a short term. If you've been checking out the Top Tier Outlook newsletter the past 2 weeks, the current issue is out, by the way. Again, Trish posted that yesterday for you early birds who want to get a jump start on the week. If you take a look at what we've been talking about the last 2 weeks, it's been very much of the mindset of we've got to look at short-term timeframes. That's two styles. short-term swings, which is still very much at the heart of the Sector Secrets mastery, and day trades, right? 2-day trades, right? What's happening today? And today is probably going to be the best way to deal with the euro. And why the short term? The euro really explains that well. First of all, I cannot commit to the longer term yet, Howard, so no daily time frame entries. The hourly might be the next best alternative as we're looking for support in the daily price movement ranges. And then the 5-minute might be the best way to take advantage of what seems to be a general bullish but slightly neutral climb. And we might look at the hourly price movement ranges. And yes, they are two different tools. I see a question about that from George. We'll cover that in just a moment. So I would say let's focus on which direction. Right now, 5-minute would be bullish, and even the 1 hour would be bullish. So we got the direction covered. And then time frame and time horizon, I'd say a today trade or maybe a 1 to 3 day short-term swing, Howard. And that would also be something that I'd like to be maybe bullish in, but it's going to be really tough at the moment. I think it's going to be really, really tough because ultimately we do have some challenge with the structure. Yeah, I think we're going to be a little challenged with the structure. Yeah, it's still kind of it's still very much sort of bearish. So that might be a challenge there. So maybe a today trade, Howard. Yeah. All right. So again, if you're wondering about what the heck is a today trade, why do you call yourself a boring trader? Look, I have gray hair. I don't know if the camera picks it up. I don't need any more gray hair in my life. I'm not here to day trade with my hair on fire and 500 miles an hour. It's about finding 2 to 4 trading opportunities a morning, maybe another 1 to 2 in the afternoon, keeping my pipeline full with maybe a half dozen trades per day on a short-term time frame that takes advantage of today's movement, today's follow through. Then we close the trades out, and the very next morning we start with a fresh book, a fresh set of eyes, and we just manage risk on that shorter term time frame. And that's a great way to deal with, and I think the euro actually really emphasizes the continued macroeconomic uncertainty. It's not horrific. This is not in any way a market circling the drain. It's a market that doesn't know what the Federal Reserve has planned for the remainder of 2023. One more rate hike, a rate cut? Are we going to pause? And when we don't know what the monetary policy track is, right? When we don't know what that is, it's hard to commit to the longer term time frames and longer term time horizon. So this truncating of the time frame is absolutely tactical, gang. As long as that uncertainty is kind of overshadowing everything, this is the best way we can stay busy. All right. So George had a great question. So George's question is, I watched the day trading replay. Thank you for your time, George. I hope that was helpful. Is the daily price movement range, the DPMR, same as the hourly price movement range, the HPMR? So George, the process that I created actually over a decade ago now, the process is the same philosophy. Can I look back over 6 months and find historical volatility patterns? That's the only thing they share in common. They're based on historical volatility. Let's tackle the daily price movement range first. The DPMR is for swing trades, period. So 1 hour time frame, could be a 4-hour time frame, daily time frame, overnight exposure swing trades. Why? Because the way the data is curated is based on a session, an entire session. So Monday, Tuesday, Wednesday, Thursday, Friday. It's a longer curation giving me the zones based on movement per session. Okay, which makes perfect sense. And it's very accurate for swing, for overnight positions. Let's talk about the HPMRs. The HPMRs are for day trading. The HPMRs are what's part of this class. The HPMRs actually came first. HPMR stands for hourly price movement range. So imagine now, instead of looking at the way in which the volatility patterns occurred on a Monday, and by the way, it is day specific. Now for HPMRs, just as the name suggests, it's hourly. What are the 6 months historical patterns for 9 to 10 o'clock, 10 to 11 o'clock, 11 to 12 o'clock, right? That's how granular we get. And we're looking for those patterns for the specific hour. So anything that's less than an hour in time frame, you might say, Rog, I like trading off a 30-minute time frame. Great. hourly price movement ranges. Rog, I like a 15-minute time frame, or I like a 1-minute time frame, right? Great. Hourly price movement ranges, because now we're curating the data based on an hourly type grouping, not a daily type grouping. And that's the difference. And they yield completely different zones, because again, what could a market do all day today? Very different than what a market could do from 10 to 11 a.m. today, right? So it's very specific to the type of data that we're curating. And at this process, again, we've changed to our own data. We're curating it ourselves. And this has been the way we've been doing it for about 2 years now. So it's actually a completely different curation of data than what I was using even 10 years ago. It's far more accurate for what I need for the HPMRs and the DPMRs and any kind of PMR that I'm going to calculate from this point forward. We're very much reliant on our own curation of data. So they're the most accurate they've ever been, which many of you who've seen these things at work, I mean, gosh, look at right here, ZB, 9 o'clock on the 8th, right into the green zone, right into the red zone. They're just crazy accurate. And the other thing that I love about the PMRs is, for the most part, it's a very small group of traders who have this tool, because most traders don't know that you can find volatility patterns. They don't know how, right? So I love an edge where it's something that only we are seeing, right? When you've got this indicator on your screen, it's only something we know exists. So it's pretty cool. All right, next up, iPod Touch asks, what is my interpretation of the candle for the August monthly close? iPod, thank you for the question. I don't look at monthly charts. I don't interpret them. When I'm a trader with a short-term time horizon, monthly charts have no place in my approach, because think about it. That's the open, high, low, close for an entire month. That's not going to track back to the risk I'm taking. That's not going to track back to the trend that I'm trading. So monthly charts have no place in my process. So I'm not going to give you a analysis on something that I'm not going to do. I talk my book in these sessions, right? I'm talking about trades I've either taken or I'm going to take. I don't think there's any more transparent an approach to this job than, hey, here's what I think. No. Here's what I'm doing, right? That's the most important. And I don't use monthlies, my friend. I do appreciate the question, but I do not use monthlies. And again, think about, what is it that a monthly is really telling me? The trend that I might see for the next few years, the trend that I might see for the next few months. How does that track back to the risk that I'm taking on a 1 hour, or the risk that I'm taking on a daily? It frankly doesn't. And so a lot of traders will use a monthly to justify what they think, but then they realize, oh, this is a very different risk profile, a monthly time frame, than an hourly or a daily. So I try to avoid that trap. And it is, for me, a trap. In terms of what happens when we start to extend timeframes out to justify direction. How about we just stick with the time frame we're trading, right? If I'm taking a 5-minute setup, what's the trend on the 5-minute? What's the risk on the 5-minute? What's the support, resistance, hourly price movement ranges on the 5-minute? And I'll do the same thing for the hourly. I'll do the same thing for the daily. All right, CNE Deborah asks, where can we find the clearing range V3 indicator? So yes, the clearing range tool is part of the class. And there is a version of the clearing range tool in the Sector Secrets Mastery. When you join the Mastery, whether that be because you took a class and now you have 1 month or 3 months or a year access to the Mastery, or not, we do have a set package of indicators for the Mastery. There are some premium indicators that we make available for the classes. And I think I've got the basic clearing range tool in the Mastery. And then I think we have the premium one for the class, but I'll have to double check on that. And there's just a couple features that are different, but they do the same thing, which is, how can we look at time and ranges to understand the follow through and the breakouts of the market during certain times of day? Really important. So yes, you'll see the layout in the Sector Secrets Mastery. Deborah, you'll see that in the, I believe it's the room drive. And then for the class, we have the class resources. So there are 2 separate things. As far as the levels, yeah, I'll get into a lot more of that in the class. And we might touch on that on Wednesday. But those are levels that I use to understand where sentiment might shift and or accelerate. All right. Okay, next up, Larry asks, which one of my HDPMRs would or could I use to forecast the range of the day in the S&P? So if you're looking, Larry, at overnight exposure, right? You want to be a swing trader. And that's the class that I had earlier this year, right? So there's always a number of different things we can do as traders. We can embrace different time frames, and therefore we can embrace different time horizons. How long might we be in a trade? And then that's two different styles. So if I want to be a today trader, which I think is working best in this environment, that's going to be 5-minute hourly price movement ranges. But if you want to know what could happen today, well, I'll show you. That's going to be the daily price movement range. And that's going to be using, there's a lot going on here. I was pulling some Pingala levels. All right, let's clean this up. There we go. So there's your daily price movement ranges. Remember, they're wider. Price is going to have to move more to close the chasm between current levels and the yellow zone, which is resistance from the daily price movement range, and the gray zone, which is support. And you can see here, if I've got the directional bias, anytime prices sink into the gray, I can be a buyer. When prices rally up into the resistance level, that could either be a target for the buy or that could be a short, depending on the underlying structure. But if you're talking about today, not hour by hour, that is the daily price movement range, just like the name suggests, right? Pretty simple. Yeah. All right. Next up is, let's see. So Deborah, yeah, if you want any of the tools we have in the mastery, log into the site. So Charts and Coffee is not going to be, tech support or support for the mastery. If you need some questions answered about the mastery, come on in and we can show you where everything is. That's not going to be ideal, obviously, for Charts and Coffee, since many traders won't have access to what it is that I'm even talking about. Yes? Okay. All right. Next up is, did I spill my coffee? I don't think so. That would be tragic. No, I didn't. Okay. Yeah, I made a pretty big espresso today. All right. During the day trading replay, I said the HPMRs cost $800 per year, bought separately, but only the DPMR is available under the George, contact the office. I think both of them are there. If you scroll on down, they're both in the indicator section, I believe. But remember, if you're looking to learn how to use the DPMR and get all of the indicators, George, I'll tell you this straight up. When you get the class, which teaches you how to use the indicator and comes with a whole host of other tools like the multi-trend and the Darvis 3.0 and a number of other things, the 1 year and the elite is probably your best bet, because you get the class, a year of the hourly price movement ranges, and some unbelievable amount of time in this mastery too. I've forgotten what the package is, but so that's what I would tell you. When we put these classes together, gang, we try to throw as much in there. I want to say it's a year of them. I have to double check, but I want to say it's a year of the mastery, a year of HPMRs, the class. So well, join me on Wednesday, because clearly I'm in trading mode. I'm not in class mode in my head quite yet. But definitely simplertrading.com/gain, and we'll get into the details of that. But before you buy it a la carte, George, I just don't want you missing out on when we give you all a great, 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 great deal. Okay. All right. So it's 1 year mastery, 1 year HPMRs. It's bonkers. It is bonkers. Okay, gang, I'm out of time. So let's see. Can I put percentages on how often the daily price movement range is? 68%, Real Keel. 68%. I can. 68%. All right. So that means there's obviously a small percentage of time where we're outside the normal ranges, but 68%. And the same thing goes for HPMRs. So Real Keel is asking, can I put a percentage on how often the daily price movement range holds? I don't know the upper and the lower. They have to be looked at independently, right? We're not going to hit both levels every day. Sometimes we do, sometimes we don't. But 68% probability on both the HPMRs and the DPMRs. And by the way, gang, you'll notice that my win rate on my trades using these is about the same as the percentage in terms of holding. So usually my win rate hovers between about 68 and about 72%. So that's not by accident either. All right, gang, have a great one. And I will talk with you all tomorrow, same time, same station. Yes. And remember, Fall trading season is here, gang. We've been waiting all August for some better volume. We're going to get it, but are we going to get chop? September is typically choppy the first 2 weeks. And remember, we still have that budget hanging over our heads. They don't come back to DC. The House does not come back to DC till the 12th. All right. Okay, gang. Until then, talk to you soon.